How's it going, everybody? And we just recorded an awesome episode with Rachel Swanson. She had quite the story to share, and she had some tips to drop for us. One of those was how to have a home run deal. One of her first deals, not her first, but pretty early in her journey getting into real estate. She purchased a group home that she acquired for $735,000, ended up flipping it only 18 months later for $1.3 million. That's a cool $600,000 profit, but it didn't come without some obstacles, and we'll get into that in this episode. You don't want to miss it.
How's it going, everybody, and welcome back to the Real FI Podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
It's going well today, Patrick. Thank you for that intro. I'm super excited for today's guest, and we're not going to hesitate to get into it. So today we've got Rachel Swanson on with us. So I'm going to go ahead and hand the reins over to Rachel. Rachel, why don't you tell us a little bit about yourself and what you've got going on?
Yeah. So thanks again, guys, for having me on. I love putting a face to you guys. It's real fun to connect and see other investors doing other stuff out there too. But yeah, I'm one of those, I feel like I've been a chameleon because I've changed what I've done over the last several years multiple times. And so at this point, when people are looking online and figure out who I am, I started going into real estate investing about 2.5 years ago. And now I just retired my husband from his W-2 job about 3 weeks ago. We were able to launch our property management company at the same time, acquire a bunch of rentals, and we are actually doing it. It's pretty fun. So before that, I was involved in, being an author and a speaker, and that kind of, developed over time over that, but that kind of fell apart in the pandemic. 2020 kind of hit hard on my business. And so, I was looking for a plan B, and I'm actually so thankful for real estate because it is truly so much more passive, and it's so much better as far as long-term growth, stability, all of that, than any other business structure I feel like I've ever been involved with. So that's a little bit about me. And then I have 3 kids, and they're twin boys who are 10 and my daughter's 9. And so I just want to let you know, I'm a mom. I'm doing this from home. I do it part-time. And yet we've still been able to make some really huge hit some really huge milestones over the last couple of years.
This is great. I feel like we're going to have a lot of great things to talk about here. And I know that our guests are going to want to focus maybe on the real estate stuff, but I think it's interesting that you have that prior experience of being an author and a speaker to kind of contrast that too. So why don't we talk about that briefly and, some of your experiences with that, how you got into being an author and a speaker, and, what kind of things you were doing with that business.
Yeah. Well, I actually kind of fell into that one too. I was a dental hygienist before that. And I was pursuing, this is back in the day when blogging was, kind of popular. And so my blog started getting traction, and long story short, I started pursuing what it takes to publish a book and go into that. And I had a really kind of unique idea for a book. It kind of was birthed by my daughter, actually. She was tugging on me one time, and, she wanted to get my attention and go color, in one of her coloring books. And as we're sitting there coloring, I wanted something that had a little more, personal growth added to it, and not just like coloring Minnie Mouse, not that there's anything wrong with it. And so I was looking online to see if there was like a personal spiritual growth, like coloring book for adults and children, and there wasn't anything. So I thought, back in my head, it just felt like this was the time to pursue it. So that ended up being a national bestseller, which was really crazy and wild. It went all crazy at that time. And then it launched a sequel after that, and then another book after that with the publisher. And just kind of fell into that and put my dental hygiene career on hold. And I thought that was literally the thing that was going to produce financial independence for my family, to get my husband out of his job. He actually quit his job twice now. The second time it's for real. Like we're set on that. But the first time he quit, it was right when my business was really exploding. And he quit for about a year, was kind of Mr. Dad, doing all the things. This was back in 2018. And after about a year, my business, it was going, but we just needed a little bit more substance to kind of get some traction. And he was getting tired, I think, of being Mr. Dad and didn't know what to do with himself. So he went back to work. He devoted himself a couple of times, and it was actually a huge blessing, because then a few months after that, that's when 2020 hit, and that business of mine really fell apart. And that's when I became an accidental landlord, and now the rest is history.
Man, I really love that. And I think that plays into a lot of the listeners out there that, the aspect of being a chameleon, of being willing and able to kind of change careers and go through things and then find what really makes sense to you. And I think real estate is that for a lot of people. So let's get into kind of how that real estate journey started from you becoming an accidental landlord.
Yeah. I think first and foremost, I think just thinking about, the type of person I am, I think I've been able to know how to pivot really well. And that's been really helpful as an investor. And I think as an investor, it's a really nice skill to have, because how many times have you guys had your projects and they go 100% exactly the way, you thought it was going to be? No, you always are pivoting. You're always switching gears. It feels like you're always taking, what you thought was going to happen. Then you realize something else, needs to shift and change. So, but just going back to what you asked, so again, I had to be miss pivot. And at the time I was pivoting, I actually, it was by accident, but we were trying to buy another house. It was our primary house we were trying to buy. And we were trying to sell our other house, and it was a beautiful house, and there was no reason it should have not sold. I mean, everybody looked at it. Everybody was like, it's such a cool house, and it's a pretty house, and it just wasn't selling. And so at the last minute, because we were in escrow for this other house and I really wanted it, I went back to my lender and I said, hey, what can we do? Is there any way we can hold on to this other house then and rent it, but pull money out and still have enough to put down on our new house that we want? And she said, yes, we can do it. So we pulled a HELOC. And we're able to, at that time, this was like 2019, and we pulled a HELOC, got a killer rate right at that time. And then really by the time, we pulled the money, we're able to close on that one. The other house, we got a renter for it, and it was cash flowing even with the HELOC and everything about $1,000 a month. So, for us, it was amazing. And then it also came about where we ended up, didn't really know about the term house hacking at the time, but we ended up kind of house hacking. We had a finished walkout basement to the new house that we purchased, and it had like 3 bedrooms, a bathroom, and a kitchenette, which we scaled out to be a little bit more of like a full kitchen down there. And it was a little more separated from the house. There was a door, doors to separate it. And so at the time, there was this couple and this family that was living in a trailer. It was definitely kind of a crazy, wild story, because we didn't really know them very well at the time, but we could tell they were just good people and they needed some help. And so we had them rent from us for only like $800 a month. It wasn't a lot. I mean, where it was, that was pretty low. And and they rented for us for a year. But you know what? Like that was like I said, 4 months later, about 4 or 5 months later, that's when my business fell apart. And that extra $1,800 a month, you guys, that was really crucial at the time. So for that next year, that was super helpful, because my husband had gone back to his job. So at least, his was almost covering everything. And then, we had that extra. And so we were just making it. And so, but that's when it opened my eyes of, oh, this is really nice. Like this rental income and everything, like they're really easy and it seems pretty nice. And so in 2021, the beginning of 2021, that's when I picked up Rich Dad, Poor Dad, popular book. And that really just opened my eyes to the power of real estate. And so then I dug into about 40 books, all within about a couple months. I'm a reader, since I was an author, I'm a reader. And I just, researched everything I could to learn how to do this. And I applied everything I could right away. So, we bought a property again, like another property in January of that year. It was our first one off the MLS. Not even a great deal, you guys. Like it wasn't anything great, and it's still not even anything special, but it got us in the game. And I think that's really important when you're first starting out. I mean, you don't want to get a really bad deal, because then it could give you a sour taste and you just don't want to move forward. But it was okay. It cash flows maybe 100, 200 a month, after expenses, all that. It's not that, like, it's just whatever. And that gave us the courage then to step into the next one, which was a really big deal. And that really changed our, financial trajectory after that. So
that's amazing. And there's so many things inside that story that you just told us that I absolutely love. But one of the biggest ones is I've told so many people, like one property could change your whole life,
Mm-hmm.
And the fact that you became an accidental landlord, it was going good. So you decided to rent out your basement, and then your whole kind of world just collapsed. And without that, things would have been a lot different, you know?
Yeah.
Life would have been different, at least for that period of time until you figured the next thing out. And you might not be talking to us 2.5 years later, financially, independent, husband, quit his job, all of that. So I say all that, which is saying for everyone out there who's listening that, doesn't have a property yet or has been on the sidelines for so long, like, what's it gonna take to go out there and do it? And stories like this are what James and I really try to focus on bringing to the table to get those people from on the sidelines to in the game, because it really does make a huge difference. James, what do you think?
100%. I think that your story really shows how people can take those small steps to scale up. And, it started with being an accidental landlord when you decided to keep your property. That was your primary residence. And I'm kind of curious, when you were looking to sell that one, what were you trying to sell it for? What was the market rate going to be for that property?
Right. So this was in Idaho. And let's see. So we purchased that property a year before at $260,000. And then a year later, it was appraising for maybe, because we remodeled the kitchen, remodeled the bathrooms, did fresh paint and all that. Even then, we didn't put a ton of money into it, maybe 20,000, because we did a lot of it ourselves too. And so it appraised in value. I think we were trying to sell it for 325, so nothing crazy, but it already had increased in value quite a bit, and it was comparable and everything. But here's the cool part is, then we held on to it, and guess what? We sold it 2 years after that for $450,000. So, and reinvested that into a cash flowing four-plex multifamily that cash flows $2,000 a month, and it's worth $1 million. So,
So that must have been around
Bam.
2022 that you sold that.
Yeah. So we sold it. Was it 2022? Actually, no, it was like the very end of 2021. So the very end of 2021, we sold it because we were trying to sell it in 2019. So we held on it for 2 more years. And then the end of 2021, we sold it and reinvested it in a 1031 exchange to put into this other property. And yeah, and
So
it's awesome.
not only was the fact that it didn't sell make you an accidental landlord and, started you on your whole journey, but then you 1031 exchange that property into $2,000 a month, $1 million property a couple years later. But it was one of the best things that could have happened, because for a lot of people out there that aren't aware, states like Idaho and Utah were like some of the most moved to states during the entire pandemic, and the appreciation was through the roof on those properties.
Yeah.
So you got to experience
I will say
all of that.
Yeah, I will say, I mean, there was a bit of timing involved that wasn't, probably as normal because of the whole COVID pandemic thing and all that. But I would say there's never a bad time to invest. Like, there's always going to be opportunities out there. You just have to either get creative or, do the work to find them. And so, for this one, it just happened to be, we actually, when we found this fourplex, it had been sitting for a while because it was way overpriced. It was an Idaho market, 2021, things were already kind of overpriced. And so, but I saw the value. I knew what it was supposed to be worth. And so I continued to stay in touch with a real estate agent and let them know that we were interested. But, the sellers were not interested at the time in going down that far until finally they were. And they did accept an offer that I was like, okay, I'm comparable at this. Like, this would still cash flow well. And that's the thing. Like, it was a brand new fourplex, and even brand new, all the numbers made sense, like, that's the thing that some people don't look at. They think, oh, well, it's brand new and it's not going to, cash flow. No, like, that could actually still cash flow. You just got to look at your numbers, run your comps, and double check and make sure. So sure enough, we get that. And then sure enough, when it came time to appraisal, it actually appraised, crazily enough, it appraised a little lower than even what we put in for the offer. And so, and we ended up getting it for that price, which was great. So yeah, we got a great deal on it. It's one of our best properties, really easy maintenance, all that kind of stuff. And, we'll keep it for a long, long time.
I know Patrick has that strategy too of keeping eyes on those properties that you really like and just being
Yes.
patient. Because sooner or later these sellers got to sell. And what you did was you remained consistently in touch with the seller's agent, plugging them, gaining information. I'm sure each time you talk to them, you're maybe learning a little bit more about the seller's position and what was important to them. And eventually you're able to come to terms and make a deal happen. So, I think
Yep.
that's super important, especially for some of those listings now that are sitting on the market for a little bit longer period of times. Keep in touch with the listing agents. They're not going to be firm on that price forever. Maybe some sellers will, rather, have a vacant property that never sells if they don't hit their price. But more often than not, you're going to be able to strike a deal once sellers realize that, the market is telling them something, and that's that the price is too high. So I think that's amazing.
Exactly. Yeah. Stay in communication. You just never know what's going to happen. Like, I didn't know if we were actually going to be able to make it work, but ended up working out perfect. And, that's what's great. It's only because I continued to stay in contact and kept pursuing it. So
That's really the biggest thing. Consistency with everything, consistency with all of it. So, all right. So we got 2.5, 3 years. So what's your portfolio look like right now? You accidental landlord, house hacking, a four-plex, like what is it all? What's it all look like? I know you're not retiring off of $2,000 a month. So
no.
let's dive into that.
Yeah, not quite. Yeah, it's been interesting. We're in a lot of transition right now. We had another property we bought in 2021 that we just sold. It was what's considered a rooming house. We actually bought, that one was the creative one that really changed everything. It was a dying assisted living home that had it was a 9-bedroom, 11 bath. And then it had a house, like a 3-bedroom, 2-bath attached, like parceled all together, because the original owner, who was like 80 plus years old, he had the idea, and he even had plans and everything, and parceled it together with the city to where he was going to build out this robust, like 16-bedroom kind of, assisted living facility. Well, 2020 hit, and some of those really fell apart, and he got hit really hard. And it sounded like, it was funny when we were talking to him a little bit. He was like, when you're my age and you start taking care of people that are younger than you, you might want to get out of the business of assisted living. So, so he was ready to get out. And so we bought it from him. And, the price, when we were looking at what it was, we figured out all the worst case scenarios, because what we wanted to do with this place was turn it into what's called like a co-living facility or a rooming house. I'm not sure if you guys are familiar with those terms, but it's basically where you rent by the room and you have shared living spaces with tenants. And that's pretty much it. You just share by the, rent by the room. And so what this helps with is, number one, you can also keep the cost down for rent per room a lot more affordably for people. And for you as an investor, it's great because you get typically higher cash flow, because per room cash flow is typically much higher than you would if you rented the whole place by itself. So, with that place, we were assessing everything. And even with, understanding what this was, we knew that we could, at the very least, if we had to get out of it, because I always look at worst case scenarios, like, can we get out of this and not get completely shot, wiped out? And we knew we could parcel off the house if we had to, sell that off, reinvest it into it, and then sell off the other, and we would be fine, like based on what we bought it for. So we had that figured out, and we started renting it by the room, and this thing was cash flowing like $8 or $9 a month as far as gross rents. And so, it's pretty good when, you're jumping into it. So that we actually did, though. The way that we acquired that one is a way that some people are like, oh no, you shouldn't do this. But we did a refinance on our personal home, and we took out the funds, a certain amount of equity to put down on a commercial loan, because you needed a commercial loan for this property, to put down onto this place. And, at that time, interest rates were still pretty low, and we knew the equity in our house that we had just purchased had gone up significantly. So we took the value of that and we decided, let's make our money work for us, right? We want to make sure it's working. So we pulled that out, put the capital towards that. And then we went through a process of trying to figure that whole thing out because this was totally brand new to us. So property management, all that kind of stuff, we were doing it all ourselves. This was the property about 45 minutes away from us, and required a lot of work initially. My husband, he is really handy. He does a lot of the DIY stuff. Probably a lot like you, Patrick, right? Like I see you getting in there and doing a lot of that stuff. And so,
Yep.
and yeah, and there's sweat equity involved. And so he, in the first 30 days, you know, he did all this paint. We did all this kitchen remodel, expanded it to be this like double kitchen and got all our tenants in. And it was a journey of trying to figure out leases for this type of space because like there's shared living environment and how does this look and how do you keep things clean? And so I had a cleaner that came in every week to clean the shared spaces so that people weren't grumpy about it, you know, because nobody wants to clean if it's somebody else's mess. And so that was a journey. And then we had to go towards the, you know, with the city to convert it into the official rooming house. And that was a huge process. And a couple times we thought we were not going to be able to do it. And but sure enough, it was crazy. But we got to that point where we were able to get it approved and everything. And at that point, you know, we see people ask us why we sold it because we just sold it. And because it was cash flowing great, it was a great property in a lot of ways. But, you know, we had we forced so much appreciation out of this. But because we actually tried to get a refinance and it came down to the point where appraisers didn't know how to appraise this property because it was so weird and so unique, not in a bad way, but it was different than anything else they could figure out and put their finger on. So for us, we just, yeah. So for us, and then we moved, we decided we were moving, we moved away from Idaho. We're in Texas now. And it was one of those properties it's kind of high maintenance, you know, it was a little high maintenance. And I didn't really trust or feel comfortable hiring on any other property manager to take care of it. And nor did I don't think they really knew how to do it as well. And so it was one of those, I just didn't want to manage from afar. And looking at it, I was like, we could sell this. I told my husband, we can sell this and reinvest it in 3 other properties and make higher cash flow and have higher appreciation potential if we sell it. So we decided to do 1031 exchange and sell it. And we were super thankful. We actually ended up getting a solid buyer at the appreciated price that we got, which was, you know, but at that point, since we sold off the house earlier that year, we flipped it, basically sold that off, and then we sold the facility. So initially, I'll just give you nice numbers because I'm sure you guys want numbers, right? So numbers, you know, yeah. So numbers, we bought this in 2021 at $735,000 total. And then we probably put maybe $40,000, $50,000 with like furnishings and all that kind of stuff. We converted 3 rooms into midterm rentals with furnished rooms for nurses and stuff to kind of bring up a little bit of cash flow and keep the consistency there. And then we sold both the house and that place together for a little over $1.3 million. So that's an over $600,000 gain in equity in less than 18 months. And we got cash flow of at least about 50,000 net, 50 to 60,000 net for the year.
Tell me how that felt to do that deal, because that's an amazing.
I will say, like, deal. I felt, yeah, it feels pretty awesome. That one was like, yes, we did it. You know,
that's what we like to call a home freaking run. But I think what's important to point out here is that you guys took a really big risk by acquiring this property because it was something very novel and different. And having started doing a little bit of development stuff myself from my small, tiny project that I'm doing, and I know Patrick has been through the ringer too on multiple fronts. You know, when you have to go to the city or the county to get these kind of plans approved, you know, it's an uphill battle, especially for the new investor, because you don't know what the hell you're doing. You don't know all the requirements, all the zoning, all the site plan requirements, all the things that go into it. And then you've got a whole bunch of people giving input from different directions, city planners, county people, you know, this, that, and the other. You know, what was that process like getting through the planning process to get that, you know, site operational?
I will say from day one, that was like we were in battle, like every single day. So, and I won't say this to be I just saying it to be very honest. Like, it was a tough process for us. Like, we learned probably 10 years worth of real estate in like a year and a half. But that is also the benefit, is like we threw ourselves into something that, even though we thought we had done a lot of research, we had done all these, all that kind of stuff, and still, there was unexpected things from city to, understanding like what the heck is parceling off and getting a, why do you have to have all this stuff, right? And trying to back to the city and tell them and explain like why there's purpose in this and why this needs to be converted and why it is going to make sense. And so it was truly every single step of the way, I felt like we were pushing and fighting for something. But I'm so just freaking thankful that like we literally won. Like, the whole process, it was hard, but we won, and it was worth it. And still, again, like with that with that property, it was a risk. However, like I said, we were assessing our risk in worst case scenarios. In worst case scenario, we'd have learned a lot, and we could have just sold it and gotten at least what we invested our money back in. So we thought, okay, at least if anything, we're not going to lose everything from it, and we'll have learned a lot of valuable info. Now, I can't say that that's the case for everybody, right? Sometimes you lose money. And actually, I just got into a situation where doing a private money lending thing, and I lost over $30,000. And this gal actually, so Melanie Lefevre of Superior Homes, do not ever lend to her, you guys, just so you know, putting it out there. But she is a fraud, and my bank is still trying to attack her and obtain her funds, and they've gotten me back some of it. But regardless, so sometimes you lose. I'm sharing that because like I haven't won everything. And, there are some cases where it's been rough and we've lost some money, but this was one of those where we had to take worst case scenario. Would we still be fine? And even with that recent lending issue that we had, I thought, we're in this place now. It's like worst case scenario. If I lost that money, would we be totally detrimental? No, like we have other savings, we have other investments, we have other funds. So I think trying to figure out your own risk tolerance is really important as an investor, because then you can know, like, you want to be able to sleep well at night. You know what I mean? And so, yeah, like
there's a lot of key things in this. And I think sometimes, your risk tolerance and your willingness to make things happen are a little bit different. Like, you have to be mentally strong to do anything that requires a zoning change, something to do with, the county variances, all like development of any type permits and all this other stuff. Like, you have to be really mentally strong and do your research on this stuff, because like you said, majority of the people are not very helpful that are in charge of like, revitalizing neighborhoods in downtown and all of that. It says this, we interpret it as this. It is your job, to find all of this stuff. People are not very helpful. So, I mean, there's a couple other things in this, is that, you started off with, you took out a line of credit on your primary residence. I think that taking out a line of credit on your primary residence is only good for one thing, and that's investing. And that's what you did. So you did the right thing for taking out a home equity line of credit on your house. And this is the second time that you've done that to be successful. So number one, awesome. Number two, you took your risks, and you knew that you would break even or lose a little bit of money if it didn't pan out, and you were okay with that. So bam, hey, solid investment to me. Number three, you guys put the grit and the grind and everything and actually made it happen, and made 600 grand in a year and a half. And like you said, that 600 grand then give you the ability to buy 3 other properties. So you probably took this $1.3 million property and turned that into $2.5 to $3 million worth of properties. All from a house that didn't sell. and you became an accidental landlord. I mean,
Yeah.
it's
And
freaking awesome.
And going back to, you were asking what my portfolio looks like, because I said I'm all in all this transition. So currently right now we are getting our a short-term rental property that we just bought here ready. That's our first like official short-term rental property. It's a super cool modern industrial one. We have 2 single family houses. Personally, we have a four-plex, and why can't I think? We have 9 units personally. And then I also own about, or I manage about 20 units total. So I have a boutique, what I consider a boutique property management company as well. Cause I figured, if I'm going to be doing my own property management, I may as well help some other investors or other people along the way. So I do have a few other clients and people that I manage for them. And then we're about to launch our short-term rental property management company here in Texas. And so, so that's currently where we're at. And right now, those reinvested funds, since we have a short-term rental that's not cash flowing yet, it's kind of hard to figure out like what's our actual cash flow right now. But even without that, we're about, 6,500 a month net. With that one, that'll be pushing over 10,000 a month. And then we have another investment that isn't realized yet, but it's a much more very passive, just for the next year. And that's generating about an extra 4,000 to 5,000 a month. So right now we're looking pretty good. Right now we're doing pretty good. And we
really
have
like
savings.
that.
Yeah.
Of course. Of course. I mean, for, 2.5, 3 years of getting into real estate accidentally and building up, close to $10,000 a month in semi-passive income.
Yeah.
That is freaking amazing. I mean, that's what
Thank
we
you.
were able to do in about 3 years.
Yeah. That's awesome.
So you can go out there and you can do it. 3 years is really not that long of a time period when you
Yeah.
really come down to it.
It's really not.
And so I really want to get into the property management aspect of this because I
Mhm.
know that's one of the biggest hurdles that first-time investors go through. One, are they actually going to pay me rent? Is someone just going to move in and never pay me? Like that's the biggest
Mhm.
thing. When those rent checks start coming in, you're like, oh my gosh, this is actually
Yeah.
working. So let's get into that property management aspect of your business a little bit and talk about some of the goals and why and how you started that.
Yeah. Yeah. So property management, I think just the biggest thing I would share is just, I would not stress enough just how much you need to really screen people very, very well. If you have, I don't know, I go a lot more now with my gut. Anytime I have not listened to my gut or my instinct, it's always gone wrong. Right. So that is truthfully another thing that I look at. And now I feel like I've been able to, prevent any sort of tenant issues from happening. So I will say, my rooming house. So that one was interesting because, here we are, we're trying to convert these rooms and do a good thing, right? Like try to keep people that are single, try to keep the rent down because, it's just things have gotten expensive, right? And so, I screened all these people and there was one person. It's always the one, right? There was one person who, it was a mom who had inquired with me about her daughter who was getting out of prison for a drug use issue. And she was a Christian and anyways, whatever. But, and so after talking to her, she was like, I really think this type of shared environment is going to be so helpful for her because truthfully, it's like, it's a shared environment. You can't be engaged in doing all these activities without other people really knowing about it, right? And so, I was not I wanted, so that was my one that I was like, okay, my heart's in this. Okay, I'll let you. But I was smart about it and I was like, okay, but we're going to have a bunch of restrictions or certain things in the lease about if she breaks it or if anything happens. So I put in there that, if at any point, she was caught with doing drugs or whatever, like she's out immediately within 24 hours, that you have to get her stuff within 3 days. Otherwise we will, auction it off or sell it or whatever. I said that you would forfeit 100% the deposit if we have any suspicion that any of those activities would be happening. I said, you can't come back and sue me for any of this. Like, all this types of stuff. I put all the wording in there to make sure that we were really protected. And so, sure enough, 32 days later, when my husband and we were in Cabo, I believe, on like a little mini vacation, I get these calls, and yeah, apparently, and we had cameras actually too. We had a camera on the outsides of the house or of the place, because again, it's a shared living environment. But yeah, long story short, she got busted 32 days later and was out. And but I was fine. Like I got my stuff back, and I just felt bad though, because the other tenants, it was actually one of these other tenants who he was, the one who was on top of it. And he started noticing some weird activity in the middle of the night, some people coming in and out, and they all looked like they were on drugs too. And it was like, great. So after that, I was like, no more. Like anybody who has any sort of background, absolutely not, So I just want good tenants, especially for this place. I started to get real protective over it, because I wanted this place to be a place that felt safe and not a place where anybody would get hurt. And so we also put key locks on all the doors, like the scanner keys, like you would do in a hotel, so that nobody could just randomly open the door. Only could be tenants who can open and close the doors to come in. We put, like I said, some cameras up to make sure, people felt safe. And so, yeah, put a lot more parameters in there so that we could make sure that we had really good tenants in place. And so, and then of course there was another one after that though, that was like, I decided, for this same place, like it was a couple, it was a guy and a girl, and they both wanted to rent a room separately though. And I was like, okay, because well, actually it was because I told them you can't rent it, by the city
Together.
zoning or whatever, you can't do it. It wasn't technically, the city didn't say that, but I just felt like it sounded good. And they probably would have vetoed it too. So, and anyways, and sure enough, there was a potential domestic abuse thing there. And then we had one of the worst, most traumatizing things was we had someone pass away in one of the units. Yeah. And that was pretty terrible, but nobody else was hurt. It was fine. But it was really hard. And after that, I think it was also one of those where I thought, I think I'm ready to pass on the baton for this place. I've learned a lot. We've made our investment. I also did some significant changes after that, where I started to rent out the rooms to midterm nurses instead. And that just shifted the whole environment of the place. And everybody was so much more happy and friendly. And we had some existing people who were still really good. And so I felt like we really pushed through all the weeds, and we were able to then finally get to a place where it really was cultivating a really cool environment, and people that were there really liked to be there and wanted to be there. But it was a rough first year, first probably 8 months. It was trying to figure all that out with the property management stuff. And so again, just trying to keep my property management, I felt like every week I was learning something about how to make sure I was protecting myself, or making the lease terms even clearer, or things like that. Especially with this place, because it was so unique. Like normal leases just didn't really fit. And so I really did have to kind of customize and create my own leases for this place to make sure it really functioned well and was sufficient. At some point, I did get a real estate lawyer too, to have him go over certain things and double check some things to make sure I was covered. And I think that's a really good idea, to make sure if you're doing things correctly with your business. And so, but yeah, so since then we've had some really awesome, like great, tenants, and we really haven't had any terrible, major, awful things after that. So, but it did go, we had to go through a couple hard ones. And I think that's just part of the learning process. And self-managing is good too, I think, because you get to learn and truly learn how to manage your business, and you're in your business all the time. And so the money coming in and out, I definitely, I use what's called Door Loop. I don't know if it's super familiar out there, but that's a property management company software kind of program where, tenants can go online in the portal, and I only take direct deposit, or I only take like online payments. I don't do checks or cash or any of that kind of stuff. So that just makes it super easy. So it transfers in, and we get the funds, and, we can allocate it, and you're all on your way. So it makes it really nice.
Yeah, I totally agree with doing a property management software like that. But before we get there, I really appreciate the fact that you did go into some of the hardships that you had with this, 10 minutes earlier home run property to nightmarish kind of property where you had like all the bad things, drugs, domestic abuse, and someone die. but you did make 600 grand. So it's like, you know,
And truthfully, it wasn't a bad property when we sold it. Like it was just those first, really, it was, I think it was even only the first 5 or 6 months. It was just us trying to figure it out, us making compromises in ways that we shouldn't have. And then just a couple unexpected things that was just like out of our control. But
that's
it did.
so real. Like
Yeah.
I love that because it's real. You know,
Yeah.
all the stuff that people post on Instagram and YouTube and all of that, it's all the majority of the time it's all the positive stuff, you know?
Yeah.
And let's face it, we're 3 real people here talking about real life scenarios, trying to help real people. And that's the stuff that happens. And you have to be willing to pivot, like you talked about. You have to have a good mental capacity to push through some of this stuff, or you have to know that you're not that type and hire a property manager like James, like yourself, to go ahead and kind of, you know, take care of some of that stuff. James, what do you think?
Well, I think it's important to kind of point out now that, like you said, Patrick, she earned that 600K. That pretty much became clear.
Thank you. I feel like we did.
It was well deserved. And I'm kind of curious, when you sold that place, do you have an idea of the person that bought it? Were they institutional investors? Are they, maybe someone in your situation? Do you have any idea kind of what, the buyer? Because I'm just wondering, like, after everything you went through, like who you're handing the property over to.
Yeah, it was interesting. So it was a female investor in Washington somewhere, I believe. And but she works at a corporate job. I think she's pretty high up in some sort of corporate job. So she does have a W-2 kind of corporate job. And it sounded more like, here's the reason I think it's this, but it sounded more like she was just looking for real estate to funnel some funds into that maybe she had elsewhere into something that would be a safer, investment for future. And the reason I say that is because when they first approached us with our real estate agent, so I did have a commercial realtor and she had a realtor at the time. However, and we had told them, because we had tried, to do that refinance and got stuck at the appraisal where it just wasn't appraising, like they wouldn't appraise it. And so we had told them, hey, this is a unique property. And it wasn't that that we wouldn't have been able to find anyone appraise it. It was just, by the time where we were at in that process, it was like, oh my gosh, we'd have to go through this other lender and it would take all this extra time and all these. And I just was like, you know what? I don't want to deal with that. And so there was a product, though, I was told, like, these types of appraisers, I think it's called a narrative appraiser or appraisal. And they can do one of these types of appraisals for this type of unique property. So when I was talking to them and they were putting in their offer, because they said it was they had a lender. And I said, well, please make sure that the lender understands this type of property, the uniqueness, because we got into an issue at the appraisal time. And I want to make sure this appraises correctly, that you use the actual gross rents. Like, you need to appraise it like a commercial property, not a residential, because that's what we were trying to do, was refinance it into a residential, since it was technically zoned residential, but it was one of those hybrid ones, where it functions and looks a lot like a commercial property, but it still had the zoning of a residential. It's kind of like a short-term rental property, like it has a lot more of that, business side, which is commercial, but it's still a single family house or whatever. So when we pushed on that, they were like, oh yeah, we're fine. And then it got to the very end where they got the appraisal done. And the appraiser guy, he did go in there and he did, we were all like sweating bullets, because I was, with my realtor, because I said, is he going to appraise it? Is he going to appraise it? And because we found out it was a residential loan, we're like, this isn't going to work. But he went in and he didn't balk at it. He said, no, I've done these things before. Well, it came back and they appraised it for $850,000. And we were trying to sell. This is the property. So we had already sold the other house for $350,000, and we were selling this for 1.0125. Anyways, like a little over $1 million. And for them to go from $1 million, like we were all set to go with that, to $850, we're like, what the, this is not accurate. So we kind of freaked out and we thought, oh my gosh, are we going to have to do this? But then everyone agreed. Like even the lender was like, that's bogus. Like, we looked at the appraisal report and he didn't even appraise, like he didn't even take comps, didn't take accurate comps, didn't take any of the rents. He was acting like it was, he was taking comparable rents at like $4,000 a month gross, whereas this one's doing $8,000. It's like just not comparable. So he threw that out. He threw out all these things. So at the end of the day, we were like, well, what's going to happen? Are they going to come back and have us negotiate? We get back, like, we didn't do anything. We just sat, like, we just kept pushing forward. We're doing the things that we needed to do on the back end, some of the inspection stuff. We were taking care of all those. And it got to like the last 5 days before we're supposed to close. And I called my realtor up. I was freaking out because I was like, what are we doing? I mean, are we going to have to switch gears? Are we going to have to sell for less? Like, what are we like? He's like, calm down. He's like, so we're just going to keep moving forward. Like it's this name, like our listed price, because at this point they have not come back and said anything. I'm like, really? And so he's like, at this point, the lender, I do know he did say they were going to do an 85% loan to value ratio because they could see it with such high rents and it would cover so much that they helped her out by not doing like a 75% loan to ratio. So she didn't have to, come up as much.
That extra 10%.
And then at the very end, what's that?
I was saying that extra 10% they were going to loan on was able to make her cover the difference in the appraisal versus
cover the difference. Even though she did still put in some extra, but she didn't even come back and ask for anything. And we're just like, so at the very, like literally the day of, we're like, okay, I guess we're signing for this. This is great. Like, I hope it goes through, like we're just holding on to dear life. Like, I hope it goes through. And sure enough, but you know what? I started thinking about, I was like, okay, if I was in her situation, why would I do that? And the only thing I can think of is, oh, maybe she is trying to, maybe she even has like a 401k investment account. And maybe she's, putting money from stocks, which are completely tanking or going down. She wants to put her funds into something that makes sense. And maybe she's like, I'm willing to put more of my money, into this property than to have it over in stocks. So she was okay with it. So honestly, I still think, regardless, I think she got still what she wanted. We got what we wanted. It still was a great property. We still went less than what, it was supposed to appraise at like 1.1 million and she got it for like $1 million. So, she got it like 100,000 less for what it should have been really worth. And yeah, I think at the end of the day, we're all happy. So yeah, we were thrilled though to be able to offload that one, reinvest it into 3 other properties, which we do believe will cash flow even more and just be better for the long run for us.
That's awesome. And, talking about some of that reinvestment, I know everyone listening is very curious. Like what are some of the other goals that you have? You mentioned you've got the property management business and you've got 9 units and you've got all these other activities going on. Like where are you taking your business next? What kind of goals do you guys have for yourselves?
Yeah, that's a good question. So our goals currently is for this year, we obviously want to stabilize this short-term rental property. We're going to get up and running. And then we want to build out our short-term rental property management business here in Texas. And this little area kind of that we live in, there's a lot of short-term rental properties here. And it's a nice little vacation spot. It's like an hour outside of Houston. And, but there's no, from what I've heard, there are no short-term rental property managers that are in this area that are any good, or, they just don't want to deal with it. So it's a lot of owners that are dealing, with the short-term rental property management. And some of them are just, quite frankly, they're just kind of burnt out and they don't want to do it, but they want to hold on to the properties. Right. And so for me, we aren't afraid of that. And I want to build a business where, we create a team, like a short-term rental property management team, to also take care of our rentals. And so we just see that currently as a higher cash flow. On the long-term rental property management side, I'll be honest, it's really hard to cash flow well on that side and make it make sense on the, having your own business as a long-term property management company. But the short-term property management company has a lot higher cash flow. And so you have a lot more likely ability to be able to hire on additional staff to support the businesses, to support the rentals, to support your team and be able to put into that. So that is our current goal. And, we reinvested the funds in via pure cash properties, just because at the time we were also, because some people are like, why didn't you take loans or like do the 1031 with loans and stuff? And here's a couple of reasons. So 1031s are a little tricky, right? If anybody's ever done a 1031, there are certain requirements with that you have to play out. And one of them is there's a time limit, and that can be really stressful. And so within 45 days, I think it is, don't quote me on that. I'm not an investor.
45.
I'm not sharing financial advice, by the way, guys. But it's around 45 days or whatever that you have to claim the properties that you're going to invest in. And then I think 180 days after that is like when you have to actually have closed on it. Well, we were also we're in the middle of getting our primary house and had a loan out for that. And if we were to have started taking out 3 additional loans, personal loans in our name or whatever for some of these properties we were acquiring, it would have hit our debt to income ratio and we could have potentially not qualified for our primary house. And so there was just a lot involved in why we had to do things in the way we did. And so we just thought, you know what, we're just going to get some things cash that we know are solid investments. And in about a year, we'll refinance those, pull some money out once we're ready if we see another property that we really want, and take the funds and put them in that. And that way it's still, that way we're not up against a battle in that sense. Plus, we still want to do the 1031 because it's a tax, you save on your taxes. You don't have to I didn't want to get hit with, paying taxes on a $950,000 bill, like income. Like I didn't want that. That would be a lot. Be taken half,
really
I think.
Smart. That's really smart. And I like what you did there, because if you're about to hit that 180 days to close, and like you said, you can't get the loan, things aren't happening, buy something in all cash. It qualifies for your 1031 exchange, and then just turn around and take a loan on it, take a cash out refinance loan on it, pull out all that money tax free anyways, and you can continue on the cycle. So that was a really smart pivot there, to just buy, a couple things with all cash. I think that was a smart move. I mean, the 1031 exchange is a really great option. We actually had someone on the podcast explain a reverse 1031 exchange. I don't think James and I are at the point in our careers to do one of those yet, but there is an ability to do a reverse 1031 exchange. So for you listeners out there, like, learn about it, figure this type of stuff out, because like you said, I mean, you are talking about long-term capital gains on hundreds of thousands of dollars, which equals hundreds of thousands of dollars. So that's going to save you so much in the long run. So I love that. So stabilize your short-term rental business. I'm assuming it's probably in like a Galveston type area is where you're at in Texas.
It's actually it's probably 2 hours away from Galveston. So it's
opposite direction.
Lake Conroe is the area. And so it's just a lake community. A lot of people travel there to get away for the weekends or, the week. And so it's just kind of a Texas vacation spot. And so, I love it. I mean, I think it's a pretty place in general, but so the one that we acquired, it has potential. We're looking at more of the short-term rental properties that have, the ability to have a lot larger, amount of people. So this one can host 17 comfortably. So that was important to us. And that's kind of what we'll be targeting and, kind of going forward. I feel like there's a lot more stability there. If you guys are looking at short-term rentals, I would highly recommend, that, if you can.
Really, that's really awesome. I love that. So stabilizing the business. So what's the income goal for that? Do you have like an ultimate goal of where you guys are trying to get right now? You're around that 10,000. Is it 10,000 stabilized? Is it 20? Are you like, let's go 50 and buy the whole lake? Like what's that look like?
That would be awesome. By the end of this year, we're looking at I want to be at $20,000 a month net in my, between all our businesses and all rentals. And then, from there, we'll just keep going after that. But that's my goal, is by the end of this year to be at that point. And so then you have to kind of work backwards, right? Of being like, okay, well, if I want this, like how many rentals or what do I need to do to be able to get there? So, so we have our, our plan, and I think it'll work. I actually feel pretty confident that we'll get there. So I'm not really too worried about that, but it's just a matter of just staying steady and doing the work. And I will say too, I want to be mindful of this. I don't know. I've been, my past business when I was an author, speaker, all that kind of stuff, I was working like 80 plus hours a week trying to maintain that business and not earning nearly enough that I should have for all the amount of work I put into. And I know there are other real estate agents or real estate, when you're first getting into it, if you are doing it with your full-time job and doing this at the same time, it's going to feel like 80 hours a week. You're probably going to put in what feels like 80 hours a week. I was really blessed and thankful that my husband could work, kind of the W-2 job. And then I pushed into this business. And so I was able to put a lot of my time and effort into this business to make it, grow faster, I think, than what maybe a lot of people could. Plus we had a little bit more capital from savings and stuff. Like we're hitting 40 this next month, so it's like we've saved, money over the years and we've done pretty well. So I just want to be mindful of like everybody's on their own journey. You can do so many things though with real estate investing, more than what I feel like any other industry. And you will not have to work to death. Like truly, you could hire out a ton of stuff and not be overwhelmed and overworked. Yeah, you might sacrifice a little bit more of that passive income initially, but if it's your time and energy that you really think is most important, like you do have to double check your mental health and make sure you're taking care of yourself, go slower then. Like even if it's years from now and you're hitting that finally $10,000 a month and it covers everything and you're living your life, but you were able to do it and not burn out. That's so important, because I completely burnt out. Like even when my business fell apart in 2020, it was actually a blessing in disguise because I was exhausted and I was completely burnt out. And I vowed that I would never do another business and never start another company that would push me so much to where I couldn't work at least 25 hours a week. And so right now, I currently probably only work like 20, 25 hours a week or less sometimes. And I don't push myself above that. I just don't, because for me, my mental health and what I want is more of that time freedom than just the pure, cash flow amount. So, I'm saying 20,000 by the end of the year, but you know what? If it ends up being less, but I've been able to only do it 25 hours a week, I'm okay with that. Like I'll take that over hitting my $20,000 a month and burning myself out after working 80 hours a week. So keep that in mind. If you're building something, figure out, what's more important to you and if you can handle it.
Well, I mean, I think I definitely would take $250,000 a year working 20, 25 hours, a week. That's not too bad. I like that. I like that trade-off. I mean, that sounds pretty good. And, you definitely laid out kind of like what your why is. It's your time freedom, the optionality, control of your life. And I think that, owning your own business and getting involved with real estate provides that opportunity, not without risks, not without effort to get it started. And it takes time. And I think something that you highlighted is this doesn't happen overnight. Like you and your husband have been saving money for a while to be able to have the opportunity to grow this business. A lot of people, they're, 22, 23, they think they can get into real estate investing, buy some rentals, and like, it's just going to happen pretty quickly. Real estate is a slow cooker game. Like it takes time. It takes time to develop, not only like the real estate assets, but the capital to get into it.
Yeah.
So
exactly. Like even, I mean, really how the initial ball got rolled is really back in 2012 when we bought our first house. We did it 3.5% down. It was like $17,000, $18,000. It felt like a lot. And within 6 years, it was worth over $300,000 in equity that we gained. So when we sold that and we reinvested, like that's like, it's this equity build. I mean, I truly think there's equity involved. That's why you need to get into just buy, like go get a house. Like it may not be the best investment, but get a second house at least. And if you hold on to it long enough, it's going to appreciate in value and give you some of that equity that then you can continue to get that snowball rolling and keep reinvesting it so that it makes, more money for you in the future. And then it's really going to start kicking into high gear, like once you get that ball rolling, it gets faster and faster and it's not as much work. And I mean, I think that's definitely what you've experienced. I don't know as much of I know your story, Patrick. I don't know as much of your story, James. I should follow up on what your story is and where you're at. But I know, Patrick, you've done some really cool things with that commercial, like your apartments and stuff, and like how much you've been able to provide value add in, I mean, a year and a half, you took it in a sense slow. I don't think that's very slow, and you've made it appraised in value for what? Like one of them, what you bought for what? 800,000. It was worth like 1.6 million in like 2 years.
I appreciate the numbers, but to be correct, it's
Oh,
850 and it
850.
appraised for 1.725.
Okay, see, I was close. I was close.
No, it was. You were very close. Yes.
I mean,
Uh,
that's awesome.
it's, anyone can go out there and do it. You just have to do the work. Like
Yeah.
you got to put in the time, you got to put in the effort. And it does take a lot of time. Our story's the same way. 2012, we bought our first house, a foreclosure for 190 grand.
Yeah.
5 years later, it was worth 260, and we took out a $40,000 HELOC to buy our first investment property.
There you
It's
go.
the same thing. Like it took a really long time to do that.
Mhm.
And then it took 3 years, five, actually 6 years. April 5th or something like that will be 6 years since we bought our first investment property.
Yeah.
So we did a lot in the last 3, but we've been doing it for 6. Like it takes
Yeah.
a long time, and you got to be willing to grind. You got to be willing to put in the work. But that 6 years goes by really, really quick. And,
It does.
if you buy more, if people don't realize, if you buy more than 2 properties in your life, you are already in like the top 20% of landlords. Like if you have 3 properties, you're in the top 20% of landlords. Most landlords only have 1 or 2 properties because they're
Mhm.
happy with just having their mortgage paid or making a couple extra $100 to pay their car payments and stuff like that. So it really doesn't take that much to be in the
Yeah.
top 20%. It just takes that time. And like James just said, it is a long-term investment. It is a long-term strategy.
Yeah.
You see those old guys and gals that are at the landlord meetups and the meetings. They've been doing it for 20, 30 years. And
Yeah.
that compounded wealth, just that's really where it's at. So, I think that is freaking awesome. Real quick though, like what obstacles do you see yourself facing over this next year to help you achieve that goal? We've seen where you're coming from. You put out there your ambitions for the year. Like what's the main obstacle or two that you see yourself facing this year, given everything that's going on,
Yeah.
that you're going to need to push through, that someone out there might be able to help with?
Yeah. I think now my biggest obstacles are this is going to sound funny, but like, I swear, I think I have ADD where I'm like a squirrel and I'm like, oh, I want that one. Oh, I want this one. Oh, I want to go, all of a sudden I'll like find out about this new real estate opportunity. Oh, I want to go do that. And I want to go do this. And well, I think that's actually the hardest thing is there is so much opportunity out there that you can sometimes feel like you get stuck and you're like, I don't know what to choose because there's so many different avenues you can go. But here's the truth. So for me, I actually have to put my blinders up and be like, okay, this is what we're doing. And if there's anything outside of this that doesn't line up with what we're already focused on in the lane that we're already moving on, we're not going to look at it. We're not going to do it. It's not going to line up right now for us right, at this time. And maybe, like I said, there's still goals that can change and pivot, but at this time, we're really trying to stay honed in on what we've, what my husband and I, my partner and I, we've really talked about for hitting our goals. And so I'd say just the shiny object syndrome can be really real, and it can totally distract you and derail you from actually making a better and more intentional progress. If you just had said, hey, no, that's not in line with what I want to do. And that can be really tough, I think, for people, because especially when you're first starting out, because like, you don't even maybe really know what you want to do. Like, do you want to do apartments? Do you want to do short-term rental properties? Like, do you want to just get a single family house? Is that good? Are you going to do a house hack first? Like, there's so many different avenues for people, and you don't really know what is best until you really assess yourself, or sometimes even just start going out there and doing it. Like, I already know, from a couple of things that we've done, I'm like, I know I don't really want to pursue certain things, or I've talked to other investors and I've learned about that type of business, say like self-storage or whatever. And it's like, oh, what, that sounds cool, but I don't know if that's a good fit for me and what my personality is and for what my goals are and what I want to do. And so, trying to keep my blinders on right now is that's my biggest obstacle, I think.
Yeah, for anyone that's getting started, I mean, it's natural to have to experiment to figure out what your
Yes.
niche is going to be. But I think, as Patrick was saying earlier, and as you're saying right now, the compounding really happens when you stick with something over time. And if you're shifting lanes like every year, every two, every deal, you're going to have to relearn new things each time.
Yeah.
And you're just going to go that much slower. And it's not going to compound as quickly. And you're going to lose momentum. So,
Yeah.
of course, people got to figure out which path they're going to take with wholesaling, apartment syndications, small multifamily, whatever it is. But once you find that path, you can really accelerate your wealth building trajectory by sticking with it, repeating, refining, making mistakes, learning, repeating, refining, all of that all the time. So, Patrick, what do you got?
I am so happy that she just said all of that because I know personally I have got the shiny object syndrome as well. Like, hey, when we did my podcast, I talked about this RV boat storage facility that I pursued for over a year. You know what came out of that? Zero. So I took all that time and had to make sure I preserved all of this capital for this project that I was working on that never happened. Great learning experience. But during that time, what I should have continued to do was just focus on the things that I'm good at, small to medium multifamily, keep buying, seller finance, and I probably have my 50 units by now. So I set myself back a year by trying to go after that shiny object syndrome and go make myself $1 million because
and aren't you
my
kicking
ego,
yourself because you could have like locked in a loan at probably like 4 or 5, like 4%, 3%.
There's a
Maybe
lot of
2.75.
a lot of bad decisions. A lot of bad decisions were made, and that's because my ego wanted to post the $1 million check. You know what I mean? That's where I was at the time. So it takes some self-reflection. You know that now. I know that. James knows that. For all of you out there listening, if that resonated with you, now you know that. Don't go do that.
Yeah.
And with that, this is a perfect transition into the next segment of the show that James and I like to call the Big Four. James, take it away.
So, all right, Rachel. So I want you to start us off by telling us something that you do as a financial independence cheat code. Something that looks like a financial independence. I'm cracking up over here. It looks like Patrick's camera fell over.
My light fell. All right.
Yeah, we're all good.
Financial independence hack. Repeat that, James.
All right, Rachel.
My bad. We're all laughing and shit.
No, we're good. We're going to keep it in. Tell us your hack, your financial independence cheat code.
Okay. I think this will be short and quick though. Pursuing creative opportunities, whatever that looks like. For us, it was this rooming house idea. Yes, there was risk in that, but it ended up being a huge financial gain for us in a very short amount of time. So I think looking for those opportunities, or say, if you're looking at a house and you can see how you can add an extra bedroom really cheap or easily, or, you take a apartment complex and you can already see like, oh, there's this extra storage, like open extra storage unit that's not even being used. Like we can turn that into a laundry, facility, and they can do coin operated laundry or whatever it is. When you look at something, you might not, like the normal traditional investor that's just like looking at it might not even see it. But if you're looking to see, okay, how can I maximize this property even more? Is there a potential to even maximize this property even more in a creative way that maybe somebody else didn't see or somebody else didn't notice? And it's not that expensive or it's not too hard to do. Go for those, because those are the cherries that are out there that are easier to pick and easier to convert and really make a lot more money for the time and effort that you put into it.
I love it.
1000%. Solid advice. All right. I know you're going to have some good ones on this one. So we call this next one resources. So are there any particular books, you said you read 40 of them, podcast or people that have shaped your financial independence journey, your real estate journey, that you believe our listeners would benefit from by going and checking out?
So I'm going to kind of cheat here. Yes, I read a lot of books, but here's how I did. I think this is a really even a better strategy. So what I did is I got a Kindle Unlimited, Kindle Unlimited account to where for $9.99 a month, I could get access to all these free books for $9.99 a month. And there's a ton of real estate books out there that are, and if you're a pretty good fast reader, like I was, you can get through a lot of books for $9.99, not even have to spend much money, right? And so that was truly what I did. And so truthfully, there were some not so, great ones, but here's what I did. I just kept reading. I read all these books so I could start to learn the language of real estate. And you start to read multiple books, you start to see the patterns of the language and what people are doing and what's important and what's not important. And you can start to filter through it all and be like, okay, what is the consistent things that people are saying that are really important? And so for me, I don't think it was really one book. For me, I was able to just start to see some of the most important kind of key concepts and key terms and things like that I thought were really important by just going on, getting that Amazon Kindle Unlimited account, and then just you just searched like real estate books or short term or apartments or whatever. And like all these will pop up or like it'll be a super big discount even with that. Like maybe it's like $1 or something like that because it's through the unlimited. And so that really helped a ton. I would say also, like, I'll give a shout out to my guy. So it's called One Rental at a Time. Now I think he's awesome. I was on his podcast the other day, and I loved it because it was more about his story. And I know there's a lot of great real estate books that gives you all the terminology and numbers and whatever, like blah, blah, blah. But then you don't really get into the story and the person of like their journey and how they got there. And I liked Zuber's because, it was his story. And yeah, he did it a lot slow, like pretty slow. Like he literally just took like one rental at a time and started acquiring them. And sure enough, over time, he reached his goal of financial independence. So that's a good one.
That's a great answer. And for everyone listening, if you're not already, go subscribe on YouTube to One Rental at a Time. It comes out with daily financial news, all that stuff. It's 15 minutes a day, packed full of great information that I know I listen to every single day.
Ooh, one other one. Sorry. This is more recent. Have you guys heard, do you guys follow the Data Deli or Data Deli? It's through Bigger Pockets, I think. I think it's like an associate of Bigger Pockets. He is awesome. So he's like, the Data Deli, I believe is what it's called. So he tells you like real financial kind of current real estate news and like looks at the actual data and shares it and says, okay, this is what I think is going on. And he's just great. I like him. So for current real estate and trends and things like that, he's somebody I feel like is pretty trustworthy and you could rely on and know, what to expect moving forward in the real estate industry. So
great resources.
Yeah.
Everyone make sure to check those out. So Rachel, for this next one, this one is your future you, 5 years in the future. What does your world look like? Either, business wise or with your personal life, like describe where you're at in 5 years.
What's crazy is it feels crazy to me because when I share this, it feels crazy, but I'm like, and I know where I'm going to hit it. But, in 5 years from now, I'm making over $100,000 a month in net. But it's not even about the money. At that point, my twin boys will be 15, my daughter will be 14. And I truly want and see myself just being way more present with them and my family and being able to go on trips and really be able to teach my kid. Like at that time, I really want to be teaching my kids, this legacy of how to steward, this type of business or real estate or whatever it is that they want to pursue, but hopefully it's in some sort of a business. I'm partial. I'm going to probably try to push them into real estate. So, because it's the best, right? But I just foresee it being a place where, at the time there is really no fear of the future, like I really don't have to fear because I will have, all my investments solid and sound. I won't have over leveraged myself. I'm making solid cash flow that's reliable. My husband and I can take time off if we have to, if we, just decide, we want to take a year, and go do something, like we can and still manage it pretty minimally. And so that is my future, and also just have a team in place, because I don't want to build this alone. Like, that's not my goal. Is I want to bring other people into this, and I want to pay them well, and I want them to learn how to do this as well and be able to change their lives. And so my hope and goal is that I'll be able to help more people change their lives through either being on my team or, creating content that's valuable out there for free that people can learn from, kind of like what you guys are doing with the, podcast, and just helping people learn along the way.
You guys have heard it here 60 plus times. It's not about the money. It's about what the money can do for you. And, it opens up doors and allows you to have the experiences you want in life. So I think that's fantastic.
Yeah.
Couldn't agree more. All right. So for everyone out there that wants to continue to follow along on your journey to hitting all of those goals, where is the best place for them to connect, reach out, and all that?
Yep. Instagram's where I'm at. Rachel C. Swanson. There's been a couple of fake accounts, guys, but just ignore those. It's Rachel with a C, like a cat, and then Swanson. But yeah, that's where I like to hang. And yeah, you guys can message me. I'm happy to share whatever I know.
There you go, guys. All right. Well, you guys know the drill. James and I provide this podcast to you for free every week. In return, in your payment, all we ask is that you like this, comment, leave us a review, send us a DM, send James a DM, send me a DM, send the page a DM. Tell us you were inspired, educated, motivated by one of these podcasts that we do. That's all we ask. Share it with somebody that you might not think has listened to a podcast like this, that might motivate them to go out and reach for that financial independence that that they can go and achieve. And with that, we'll catch you guys next time. See ya.
See you later, guys.